Good morning, everybody. Welcome to another installment of the Dakota Monthly Seminar Series. My name is Christian Burish, and I'm the coordinator of the Professional Development Corps of the Dakota. And today I am joined by USD's Grants Accounting and their grant specialists at the Office of Research and Sponsored Programs. I brought us all together today so that we can get some insight on what it takes to start a grant in terms of dollars and cents. Because for all research we conduct, research is not conducted for free. And I will hand things over to Melinda.
Let me unmute myself. Good morning, everyone. Thanks for joining us. Today, I'm Melinda Robinson, Director of Sponsored Programs at USD. We have Andrea John, she's the Director of Grant Accounting, Gina O'Connor, Grant Specialist, Cindy Broski, Grant Specialist. So we will get started. We'll have Gina start us off.
Thank you, Melinda. Christian, if you want to pull up the PowerPoint, I think it'd be a good time to start that. The first thing I wanted to cover for us today is just the outline that'll tell you where we're going with this presentation and how we plan to get there. The outline is on our second slide here. There we go. So first, we're going to cover the structure of our sponsored programs office, including what the typical life cycle of a grant includes. For budget management, we got together and compiled all of our encompassing tips and tricks when it comes to how to best manage your grants. We will also cover audit requirements and cost principles using the Code of Federal Regulations. And at the end of our presentation today, we will bring in 3 different case studies, and we'll ask the audience we'll administer a poll and ask you all to respond to that before we get to the answers to the case studies. So that'll be a little bit more interactive and fun. So this is our plan for today. So Christian, go ahead. Let's go to the next slide. So here we have this slide. It's split up basically between the Office of Research responsibilities and the grants accounting responsibilities at the bottom. Now, if you wanted to understand this really simplistically, you could say that Office of Research mostly deals with pre-award and grants accounting is mostly post-award, but a lot of our duties definitely bleed into each other. In the Office of Research, as a grant specialist, I spend a lot of my time helping with proposal development and submission. It's always nice when PIs email us and ask us just to verify that they qualify for a particular opportunity before they put a lot of work into it. So we do spend a lot of time looking at the specific terms and conditions of each request for proposal. We work a lot with budget creation as well. We have a template that we use, and we're happy to guide folks through that. No cost extensions, those happen after an award has been made and you've reached the life cycle of that grant, but you still haven't met the goal of what you committed to doing and you have money left. We'll help you interact with the sponsor to request a no-cost extension so that you can keep working on it. We administer subawards. Subaward is a third party that you're awarding to complete a certain portion of the work of the grant. They typically involve a lot of paperwork, but we're pretty good at subawards. Also in our office encompasses human subjects, animal protection, environmental and safety, and export/tech transfer. And for us, Cayuse is our system of record. Whenever we apply for something, we always route everything through Cayuse. It's a good way for us to keep track of everything. So that's a crash course in sponsored Office of Research. And I'll have Andrea explain the grants accounting responsibilities.
Hello. So grants accounting is the post-award area, and we're primarily dealing with awards after the Office of Research has received the official notice of award. They have a budget in place, and then it's what we're really doing is dealing with the finances and oversight of the purchasing and expenditures to make sure that everything is compliant with federal regulations, state regulations, even university policies. So, and that it's in, that the expenditures are in line with the project. We also have oversight over payroll, who's on the projects, the effort that's being the effort of individuals on the award, payroll. We also deal with financial reporting. So at various times throughout the year, it could be quarterly, semi-annually, annually. The agencies are requesting a financial report called a FFR. And then again at the end of the award. So we deal with those financial reports, which can also include cost sharing, tracking of cost sharing. And again, those effort certifications are important, and that is tracked through this office as well. So, you know, we also have a variety of awards. The sub-awards can be at USD, or we might be a sub-recipient of an award. So there's a variety, and sometimes we're the prime and sometimes we're not. Sometimes it's a pass-through through federal agencies. And so we have to do the invoicing in and out for various awards. Sometimes it's simple with federal awards where we're just drawing down funds. But the way it works is we're not receiving funds up front for most awards. Instead, we're spending and then invoicing the federal agency or state agency to get reimbursed for those expenses. So it's at that time that we're really looking to see if they're appropriate and making sure that the indirects are following and that things are aligned with the budget. And then also we assist with award closeout, getting the funds all spent. Surprisingly, agencies don't want any money back. So they want you to spend it to zero. So we're going to assist with getting those awards spent down and closed out. And we use Banner. That's our system of record. It's a statewide system, financial system. It doesn't correlate necessarily with Cayuse, but we share the reporting between those. And so sometimes there's multiple numbers involved with awards. It could be the project award number, the grant ID for Banner, the fund number, indexes, and so there's a lot of different numbers. Whenever in doubt, just reach out. We're always here to help with those, so as well.
Okay, life cycle of a grant. The grant takes on a cycle. The beginning of the cycle starts with the proposal preparation, and sponsored programs mainly assist with that. That involves the PI, any collaborators, sub-recipients from other institutions, any internal collaborators, and then ORSP would also be an assistant with that as far as helping with the budget. We're here to make sure you're complying with any sponsor guidelines as far as page limits, formatting, things that are required, because most proposals, there's not one for all. Every every proposal has specific details that we have to follow. So we're there to assist to make sure that you follow those details so that your proposal before you submit can be compliant with the sponsor. And then once you're awarded, that's the ultimate goal, right? We all want to be awarded every proposal that we submit. So once you receive the award, the notice of award, we go through the terms and condition, make sure everything looks okay there. And if the budget matches what we initially submitted at proposal time, and if it does not, then we would do a rebudget of the money that we actually received and then pass that on to grants accounting for processing into Banner or whichever system, financial system your institution uses. Next slide, Christian. So then this is the fun part for the principal investigator, is doing the work. They spent the time preparing the proposal. Now they receive the funds. Now they get to do the work. The PI is ultimately responsible for this project. All technical reports must be submitted on time. The way the funds are spent is the duty of the principal investigator to make sure those things are spent according to the guidelines of the award. Your department is there to assist you, as well as grants accounting, if there's any question if this cost is allowable, but the ultimate burden falls on the principal investigator to make sure that everything is compliant with this award. And then Andrea mentioned earlier about the closeout. There will be final progress reports that for the closeout, any financial reports, I think is the SF 424, and then any publications. And then as you're going through the cycle of the grant, you want to make sure that you're spending accordingly, because like Andrea said, at the end, you want to have it all spent out. So you don't only want to spend 10% and you're like in year 5, you're like, what am I going to do with all this money? So you got to make sure that you're consistently watching to make sure that the grant is spent out at the proper time when you're ready to close out.
Thank you, Melinda. So looking at the regulatory landscape and spending regulations, there are very strict guidelines on these. And of course, every grant is a little different. There are going to be specific rules and exceptions on every award, and that should be on the notice of award. But it's not just the federal guidelines. We're also looking at the state guidelines, and because we're an institution here of higher education, we follow those certain guidelines, as well as university policies. Some of the policies are very detailed, like travel and such, and some are a little, less stringent. So, but of course we need to understand those, and you need to be aware that those are there and where to find those. In the chat, I'm going to post a link to the Uniform Guidance to CFR 200 that's mentioned here. And what that is it's the Office of Management and Budget Guidance for Grants and Agreements. And it is kind of encompasses, it has tons of information. It's a great reference. It's a great place to go to, and we'll share some other links as well. But it's important to understand that any expenses on the grant should be necessary, reasonable, allocable, and compliant with all the rules and regulations, policies, and procedures at all levels. So even department, it's important to communicate your plans, especially for payroll or expenditures or capital equipment, things like that. They're important to communicate with the chair, the dean, whoever it is that has oversight in the department as well. And of course, awards are given to the university, but they are managed by the PI. And it is the PI's responsibility to make sure that all of these things are being, all these rules are followed, but also getting pre-authorization if needed, finding out before the expenditure occurs that it's allowable. And then thinking about whether these, if you need changes, or you're purchasing something that maybe wasn't in the initial budget. Is it part of the project? Is it priced at a reasonable amount? It could be a contract, it could be equipment, it could be supplies. But of course, with the state, that we have contracted vendors, and things may go out for bid, and there's reasons for that. And so we need to be compliant with those rules and regulations, and to make sure that what's being purchased is at a reasonable price. The next slide, budget management. This one, so it's important to review your budget, understand the expenses that that are accruing, know what your balance is on a monthly basis. It's important to keep track of those expenses at a department level, but also for the PI to see. We need to be accountable for every expense. Most departments, or all departments, are required to review what's called a SAS 115 report. And that is a line item list of all expenses for the department. And it includes those grant expenses and payroll and what's appropriate. And so it's important for someone in the department to be reviewing that on a monthly basis, and then having a superior review it, have an additional person review it. So you want to have two sets of eyes on every account and all the transactions that are occurring. If the department is keeping a very good ledger, pulling FGI TR&D from Banner and looking at each line item and showing that to the PI, and they're reviewing everything, that would meet the qualifications of the SAS 115. So it's very important to be watching those expenses, because mistakes do happen. Sometimes things get posted to the wrong fund in the accounting. It could be shipping charges, it could be fleet charges, a simple mix-up of index numbers. So those things need to be watched and accounted for. And if changes are needed, it should be sooner than later, within 30 days to 60 days, not 6 months down the road. And then it's also important to know how quickly you're spending things, understanding and projecting out into the future what payroll is going to be going through and what other expenses are yet to be posted to the account. You don't want to run out of funds, but you also don't want to end up with a whole bunch of excess in the last month and then try to spend it out, because that's not reasonable. So paying attention to your budget and where you're spending throughout the grant is important. If you're spending more in payroll than you had anticipated, if it gets to a certain threshold in the budget, you may need to do some rebudgeting of funds. And so we'll talk about that on the next slide. So most grants have a threshold of 10 to 25%. For federal, it's 25% or more of the total costs awarded can be rebudgeted without getting prior approval. Although it's always good to check with the agency, with your award, with grants accounting, and even the department, to make sure that these things, these changes are okay, and that it's not changing the project purpose and objectives. So it could typically, what we're looking at is a major change from personnel to other expenditures. We kind of put them into those two big categories, personnel expenses versus other expenditures. Within other expenditures, it's a little easier to move funds, move budget, I guess, if you want to think of it that way. But if it is significant, such as capital equipment or participant support or something like that, it would require prior approval, because it does change things such as the indirect, because capital and participant support and tuition, those are all exempt from indirects. So it will change other parts of the budget. So it's important to keep those things in mind, and just reach out to the grants office for a little guidance if you have questions. It's not hard to do the rebudgeting. We can move things, and especially if you have an award that gets low on supplies, or if you get negative, it will prevent you from putting purchases through South Dakota Easy Buy or your purchasing, and it'll show that you have non-sufficient funds in a certain category. And it's easy for us to just move a budget line into supplies to help get that to a positive number again and get you back on track with your purchasing. So don't hesitate to reach out. We're here to help answer those questions and let you know if you're within that threshold. If it is a major change in something that wasn't in the budget, it is important then to reach out to the your grant management assistant, whoever it is, your financial officer, and make sure that that expenditure is going to be okay, and that it's not going to be denied, and do that before placing the order or making that change. And Cindy, do you want to talk about carryover?
Yes. Good morning, everyone. Carryover request, unless is specific on your notice of award or in your terms of award, individual CDAs have automatic carryover authority. However, for most institutional CDAs carryovers, we have to get prior approval, and you would do that by contacting the grant specialists in your area, and we would go through the steps to get that taken care of for you. Your notice of award will specify whether or not the recipients must obtain prior approval for the carryover. So we have that all available to us, and we are happy to assist you with getting that taken care of. We want to spend all the money that we have. Okay, next slide. For NIH, your standard terms of award provide the recipient with the authority to extend on the final period. It's not on your first period, we have to get approval for the first period of your award. Beyond the original completion date, then where am I at here? Approval project period 1 time beyond the original completion date down in the notice of award. Any additional project period extension beyond the initial needs to be have prior approval from NIH, and we in our office would assist with you there. Again, they really do want us to spend all of our money, so.
Where to find answers. So when PIs email me questions like, is this an eligible expense? Can I do this with my money that I hadn't prior planned on? There's a variety of places that I look for to find answers. First is the funding opportunity announcement, or the FOA. Whenever we help folks apply to an opportunity, we always save a copy of this to our files, because even after the award is made, we find ourselves going back to it time and time again to remind ourselves of what the rules are for that specific opportunity. The notice of award is also an important document. That one is usually a bit shorter compared to the funding opportunity announcement. Our office, ORSP, is also a great place to send questions if you've looked at the FOA and the NOA and you haven't really found anything. The NIH grants policy statement, we can also look there. It is hundreds of pages long. I think it's about 900 pages, but that's where text search is really your friend. I know folks in my position used to look at paper copies of things, but nowadays text search is really, really helpful. And then there are times where, especially if it seems like kind of a gray area, we'll want to check with the grants officer with that question. So these are all the places that I kind of run through when a question comes my way in order to find the answer.
So audit requirements. All NIH grant recipients that expend more than $750,000 in a year in federal awards are subject to an audit requirement. So of course we fall into that category as, and since we are an Institute of Higher Education, which is part of the South Dakota Board of Regents, we fall under a overarching single audit report, actually, that is done by the state. So rather than having an individual audit report from the university, it comes from the state. And so when other agencies ask for that, we supply our single audit report, and that all happens through the state of South Dakota. We do internal audits on subawards. We look at risk factors of subawardees, and they do for us as well. And so those are our subrecipient audit requests or monitoring. And so that's something that's done regularly on awards, especially that are greater than $30,000, subawards greater than $30,000. USD would be responsible for those if we're the prime and we're subawarding out to another agency. Vice versa, we would have to provide the single audit report and risk assessment to other agencies if we are the subrecipients. For cost principles, I'm going to put another link in the chat, and this one is to, again, the eCFR. So something I want to point out about the CFR, so it's the Code of Federal Regulations. It's posted online, and it is an electronic version so that it's searchable and easy to find things that you're looking for. It's for all parts of government. So it's a lengthy thing. So you'll want to search for just what's relevant. But as soon as you print this out, it is outdated because it's constantly being updated. So that's why they call it the eCFR, and that's the best version to always access online. So what we're going to look at here is the cost principles. So this is a title within the CFR. Previously, we talked about Title II. This is Title 45 of the CFR, and Part 75, which talks about the cost principles of grants. So, not just grants, but in this case, it's really about the Department of Health and Human Services, NIH. So within it, there's going to be the guidelines for what is allowable, what is not allowable, what maybe questions about indirects. It's got a wealth of information that can deal specifically with certain purchases or questions you may have, certain expenses. For instance, healthcare for your grad student, or can we use these funds to pay for publications? Can we use these funds to pay for a grant reviewer? And it's going to tell you whether it's allowable or unallowable, or if there's exceptions. And so those are important to understand, know where to find that, but also there's going to be some of those exceptions and rules that might be a little bit different on your letter of award. So it's important, again, to go back to that letter of award. And NIH also has their own guide, which is really great. That's an online guide. That one, not everyone has that. And then there's places like the Department of Justice that have some variations within their guidelines to the CFR. And so those are specific maybe to that agency. And any agency can have those types of variations. So it's important to make sure you're understanding the award that you're working with and the guidelines that are common, but then also, if ever in doubt, reach out to your agency, the agency or the unit. Sometimes, like I said, it can be even as small as the component of NIH that's giving the award. So there's always those variations. So check with them. The next slide just kind of gives a list of things that are covered under the 45 CFR Part 75. This is post-federal award requirements. So property standards, that might be like if you had purchased real property or equipment, a vehicle, we have to report on those things. And so understanding that it's important to keep track of these expenditures, but also we will need to report later on those expenditures. Performance reviews, but also financial monitoring and reporting. So the FFRs that we talked about, the filling in the SF 425s that you might have heard of, that's grants accounting helps with that. The performance and such should be done by the PI. Also, I talked a bit about already the subrecipient monitoring and management, and then record retention and access. You should always have all files accessible to an audit. You need to be able to find where those things are, have them, primarily they should be digital or electronic versions at this time, but it's fine to have a paper copy as well. We have both. And those records should be retained for up to 3 years after the final financial report of the award has been submitted. So after closeout. After 3 years, those documents no longer need to be saved. And then, if there's issues, remedies and non-compliance, you can access that information there. Closeout of awards, post-closeout adjustments. And it's important to know that, they can come back after closeout of an award and have questions, and that it's important to have those documents accessible and on hand still. And then collection and amounts due. So that's the part that, again, grants accounting would help to reconcile all the accounts, the invoicing, and make sure that our expenditures match up with the agency's expenditures, and that closeout can move forward on both ends of the award. I think now we're going to look at some case studies.
Okay, here's the first one. If you want to go back to the slide previous, Christian. There we go. One more. The case study number 1. So I think it's 2. Yep, right here. There we go. So the first case study, Dr. Miller purchases a much needed piece of specialized scientific equipment for her research on hypertension. When preparing the purchase request, she realizes that the only account with enough money is her grant for research on sleep disorders. Because both grants are funded by NIH, she charges the equipment to the sleep disorder grant. Is this appropriate? And I think we're going to do a poll. That is correct. The answer is no. Majority of people said no. The purchase was inappropriate. You can't, so just because they're both from the same agency, they're specifically different grants, and we cannot use funds from one to pay for another one. I think we've had people try to do this before in the past, but it's not allowable. There's a test that you can do to determine if it's allowable. Is it allocable? Is it specific to that grant? Just because you run out of money on one, you cannot use money from one grant onto another grant. Is it reasonable? Based on other circumstances, would this cost be allowable? A similar circumstance, would this cost be a reasonable cost? Next slide. The third thing you would look at, is it consistent in assigning costs? Is cost of a similar nature? Would it be assigned this way, especially in regards to, would it be a direct cost or an F&A cost, depending on this particular project or program? And does it conform within the limitation and exclusions of this particular grant or award? We talked a lot about the notice of award. What does that say about this cost? Is this cost allowable? So great job, everyone that said no.
Okay, case study number 2. A university employee transfers expenses from one account to another and annotates the cost transfer as to correct an accounting error. Internal audit takes exception. So internally, we're asking why. So there's a poll that's up for cost transfer. Why did internal audit take exception to the cost transfer? All right. So yes. Oh, I can't see the thing. Yes, yeah. Internal audit needed more documentation to explain. Yes. So let's go to the next slide. that explains why. There we go. Errors should be corrected within 90 days of when the error was discovered. We kind of talked about that with the SAS 115 reporting and reviewing ledgers on a monthly basis. Yeah, errors happen. But anytime that there's going to be a correction or a transfer, there's going to be documentation that's needed that fully explains how the error occurred, what is the purpose of this transfer, and then typically someone in the department also needs to sign off on that to certify that yes, this was an error. Then it gets submitted to actually, Grants Accounting does review these journal vouchers or recodes, and so we have a chance to look at that internally. And then certification of the correctness of the new charge. You know, is it still okay? And then also transfers of cost from one project to another or from one competitive segment to the next solely to cover the costs of overruns are not allowable. So that's something that we're looking for as well. And that's why more documentation is sometimes needed. You can't overspend on one account and then make it up on another grant. That's unallowable. It's not reasonable and it's not consistent with the project. So those are all things to consider. So I think that's been covered pretty well in this presentation so far. So keep those things in mind, that transfer costs are going to be highly scrutinized more, and we have sent out a policy, at least for USD, regarding those transfer costs, and it's something we're continually working on and trying to assist the grantees with. So next case study.
Okay, case study number 3. You are asked by a PI to stop at an office supply store on your way to work and pick up a few items like pens, envelopes, paper clips, just office supplies. And the PI also wants you to get some donuts for a lab meeting that morning. When you arrive at work, the PI tells you that all of the items should be charged to the grant. Your departmental administrator tells you that these purchases must come from departmental funds. Why? And we have a poll on that. Okay, let's find out which way is correct. Is it the university doesn't allow meals, or the university already had a contract for the campus supplier? Okay, so meals are allowed on research grants when they are for the subjects or patients under the study provided. That such charges are not duplicated in participants' per diem or substance allowances, if any. And such costs are an integral and necessary part of the meeting or conference, like working meal where business is transacted, and such costs are specifically approved as part of the project activity, consistent with the terms of award. Next slide. An institution should have a written policy enforced in place to address the following, which I'm sure University of South Dakota does. Ensure consistent charging of meal costs, which we do. Defines that institutions institutes a meeting for a dissemination of technical information. There's a lot of grants that we have that have the dissemination meetings. And specifies when meals are allowable for such meetings. Establishes limitations and other controls on this cost to meet the best of reasonableness. But we have to remember that recurring business meetings such as staff meetings are generally not considered meetings to disseminate technical information. So in this case, a lab meeting, they would not be allowable because it's a regular business meeting. Okay.
So over our time here, we've had a variety of things that have been tried to charge to grants, and we've had to shoot them down. We've had PIs tell us that they're having staff meetings at various restaurants and charging things like flights of beer, which are not allowed. You cannot charge alcohol to grants. And as far as having staff meetings at Red Steakhouse or wherever it might be, we have to ask, was it necessary for you to eat while you're having this staff meeting, or could you just had a staff meeting? Of course, that it really wasn't necessary. We've had some questionable advertising across our desks from time to time too. For example, a PI wanting to hand out candy to kids at Halloween as advertising for their project that was shot down, using Christmas trees and ornaments as advertising. We've shot that down too. Advertising supplies that were ordered in USD's red and white rather than the grant's media campaign logo color. So unfortunately, and fortunately, we have had to shoot these things down because these policies are in place to help us stay compliant. And in fact, all of our rules are for that reason. They're good things to have. The last thing is ordering supplies and equipment during the final days of the grant. That will also raise some eyebrows as well. You shouldn't need to order equipment right at the end because obviously you weren't using it during the work period of the grant. So if you're not sure, ask us, but if it sounds a little fishy to you, it'll probably sound a little fishy to us. In conclusion, as Andrea emphasized a few times, the PI's role is really important, and their oversight of the grant is just as vital as their role in the research, creative activity, or program activity. We understand that the administrative duties of a grant can be intimidating, but we're happy to provide that support here at ORSP. And don't forget about the support that you receive at your departmental level. I know Andrea answered a question in the chat about that as well. Always work with your department grant manager, your professional assistant, the secretary, whoever that person might be, and they will have more kind of day-to-day experience with your grant and exactly what you're doing. But then, of course, refer questions to us and grants accounting as well. You will find that you do have a support team here at USD, and we're happy to help. At this point, we will take some questions. We have someone asking if they can get a copy of the slides. I'm sure we can email that out to everyone when we're done here. Question here in the chat that says, who are the default departmental grant managers? What trainings do they receive? I mean, I would say the grant managers it really depends. A lot of departments have professional assistants, but smaller departments maybe don't. They just have secretaries, and oftentimes we'll notice at USD that secretaries are really kind of doing more PA type duties than they are doing secretarial duties. And in terms of the trainings that they receive, that's a really good question, because in our experience with working with different professional assistants across campus, we've noticed that their trainings can really vary wildly in terms of what they've been taught. And so for that reason, we've taken it upon ourselves to offer trainings from our offices specifically to PAs. For example, just yesterday, we hosted a breakfast in which we invited all the secretaries and PAs across campus, and we talked them through how to use our budget template. We've done this now for the past year and a half. We try to offer trainings to secretaries and PAs twice a semester in order to supplement perhaps a lack of training that they've received. I can't speak to the training that they would have received from their department, but I can say that we've been trying to fill that gap.
And we are available at any time to help someone maybe new to a department, someone who has questions on how to run the ledgers or make projections or any questions at all. We're all here and happy to help at any time. Dr. Freeman has a question. Do funds for a multi-year grant roll over, or do they need to be spent in a budget year? It depends on the agency and if it's a subaward or the primary award. Typically, I think, like NSF, they just roll over. You also get automatic carryover, I think, at the end of the award if there's funds remaining and still project work to do. Typically, if it's a grant that gets a new award letter every year and is a subaward and gets a new index number every year, that's a little bit different. You might, because it's a subaward. We're waiting to hear from the primary, and then they're waiting to hear from the agency. And so it's really up to the primary on how they're budgeting things. But as for a direct award where you're the primary, typically those funds will just roll over from year to year, and you may need to decide how to rebudget those or how you're going to spend those, or just know that in the end you're going to request a no-cost extension and spend the funds at that time as appropriate. At that point, you're 5 or 6 years down the road, and of course things change. So budgets will change too over the course of time as to what's needed in a project and as things progress. So those are all things that you can reach out to us about. If it's, Office of Research is going to be your contact for no-cost extensions and the award letters.
Excellent. Thank you. I think you kind of answered my follow-up question, which is, it seems like that idea where you have funds at the end of the grant that need to be spent, about where that is typically, is it allocated in what budget categories, or is it no cost extension typically the route that people go in spending those leftover funds?
Yeah, that would be if there's still project, left that isn't quite complete. Yeah, that's the route you want to go, and you'll just have to justify why you're requesting the no-cost extension and how you intend to use those funds.
Sure
And
thing.
sometimes it's, it's a simple, it depends on the types of projects. There's, your biomedical projects, and then there's your others that have surveys and are public service. And then it might be that evaluations need to be completed. And so even if that's all that's left, it's worth requesting that no cost extension so that they can be invoiced or however it is at the end there. So.
Excellent. Thank you.
Yeah, I will say in my experience, no cost extensions are generally granted as long as you have a reasonable justification. They don't want to hear from you that you just have money left, so you want to keep it going. But as long as you can point to something that you haven't finished yet and you have a reasonable plan, in my experience, they will grant that.
I also have a question. First, I want to thank our presenting. It was very informative. Since Dakota organized this, this is a question more related to the Dakota funding. This is an issue that I tried to raise 4 years ago when I got my scholarship, which is just direct costs provided. And then USC, based on the policy, took 47% of the direct costs as an indirect cost. And I try to raise this issue that taking that amount of money from direct cost is really interfere with meeting the goal at the end of the project. Of course, I try to think about the project to at least meet some of the goals at the end. I was wondering that this is something that can be again to be discussed for this type of grants that they don't have the indirect costs. And we a little bit see in the middle. I'm not talking about 0% indirect, but not 49%. And I'm asking this because I heard from, for example, if I want to give an example, is a Sanford that similar type of Dakota grant my colleague got, and it just was 25% indirect because it didn't have indirect costs separately. Is there anything that is possibility that this can be discussed again in the future? Because I'm sure some of my other colleagues, they will get Dakota or similar grants that they do not have the indirect.
Melinda, do you want to take a shot at this one?
Yeah, well, I guess I would have to have more details to answer that question, but it sounds like it's the federal, because 49% is USD's federally negotiated rate. So I'm wondering if that other institution, if their rate was 25% is why there is a difference. But as far as being taken from the direct and not in addition to your direct costs, I think that would be more of a sponsor question. I mean, we can only follow the guidelines that we're given. And specifically, since we're a subaward, we really don't have a lot of, it's whatever the prime institution says is what we have to follow. So, I mean, I think we'd have to look into that more detail to see, we can maybe reach out to, is it UND that's with Dakota? I think they're the ones that are the prime. So our hands would really be tied on that. We'd have to follow whatever the prime institution says. And I'm thinking the difference in indirects is because of the federally negotiated rate, and ours is at USD is 49.5%.
Yeah, Dr. Zvani, the budget is part of the proposal phase. So even at the very beginning, before there was an award, those indirects were already calculated into the budget. That is on top of the award that Dakota is giving. So those indirect costs aren't really shouldn't be coming out of the directs. So let's say it's an award of $150,000 direct costs. It's going to be different from PI to PI depending on their institution. Sanford Research isn't an institute of higher learning, so they have a different negotiated rate. so, the award amount would vary. The total award amount would vary dependent on that indirect rate. So we might get a $200,000 award and they get a $150,000 award, but the actual direct costs are the same. So it really, it's hard to compare one PI to another or one institution to another. That would be something that would have to be looked at from the prime awardee, UND. And then there was another part of that. But does that kind of help answer your question?
Yes.
I think UND might be the ones to reach out to, because that would have all been part of the proposal budget, and that can't be changed once the award is made.
Yeah, I completely agree, because when these indirect come to the picture, I had to basically redesign the experiments according to that. But these days, reviewer ask more. For example, for the resubmission, I have to answer their question with more experiments, and then at least it was my experience, I faced with some issues. I promised to reviewers some experiments when I resubmit the grants, but still I stay in that type amount of budget that initially I had. I know that this is something that my suggestion is I try to see whether it can be changed, this rule, for some of these type of grants. I know that this is the rule 49 or 47 or 49, but whether Office of Research can bring this subject to see whether for this type of grants that has got just direct, a little bit we compromise to put less pressure on the faculties. Yes, I know that I just gave an example. My colleagues in Stanford had more money that I had, despite that we both get same amount of funding. So I just brought that, whether that can be discussed in the future by Office of Research, if it's possible. I was told 4 years ago that even don't think about that.
Yeah. Well, there were others, circumstances with your initial award regarding capital expenditures and such, but also it varies even at USD department to department. Every department handles their indirects differently, and the School of Medicine doesn't return as much of the indirects to the PI where other departments do. And that might be the case at Sanford as well, where some of that was returned to the PI as directs rather than taking it as indirects. And that's really a department decision and something that has to be addressed with the dean or chair at the time of proposal. So.
Thank you.
Yep.
And we've reached the top of the hour. I would like to give a big thanks to our audience for making the time to come out and see another installment of the Dakota training sessions. We hold these every month. I'd also like to thank USD's ORSP and Grants Accounting for taking time out of their day to enlighten us with knowledge and some very hilarious case studies and real life accounts of the ups and downs of dollars and cents. Well, really making sense of dollars and cents at this point. I will make this recording available to everyone on the Dakota Pathfinder training portal. I put a link up in chat, but I'll email everyone again. Slides will be included as well, and an invitation to our next session, public use databases with the biostatistics, epidemiology, and research design core. Thank you, and have a happy Taco Tuesday. Have a good day.